Yeah, the new batch of data looking pretty solid. Look at equities and rates both moving up. Factory orders for January coming in as expected, which isn't bad when you expect 1.7. In the rearview mirror, we went from -0.9 to -0.6. 1.7 is the best month-over-month change since July of last year. Strip out transportation, and it's up 0.2, exactly as expected. Now, let's look at durable good orders, shall we? Now, these are January final numbers, so 3.1 now becomes 3.2, and that, of course, is a positive number. 3.2 would be the best read going back to, you guessed it, July of 24. Let's strip out transportation, unchanged. Unchanged matches our mid-month read. If we look at capital good orders, non-defense ex-aircraft, a proxy for capital spending, well, that remains at up 0.8. That remains at up 0.8, which is the best number since August of 23. And if we go from orders to shipments, well, shipments are under pressure, and they remain under pressure from mid-month to now, down 0.3. That would be the most negative month-over-month change since July. And finally, what we have here is ISM, and also very positive. ISM 53.5. That's a full point better than expected. That would be the best rate going back to the last month of last year. 62.6 on services, prices paid, 62.6. Would be the highest since December. And, of course, we want this to go the other way. In the rearview mirror, that was 60.4. If we look at new orders, last look was 51.3. It moves in at 52.2, also the best since the end of last year. And finally, employment. The employment index, after a weaker ADP in front of the big jobs report, comes in at 53.9. That's a solid read. That would be the best read going all the way back to D's of 21. So we see rates moving up. Yesterday, the low yield in a 10 was 4.10, 4.10. It's currently now coming back up towards 4.23, and the high yield today is 4.26. Sarah, back to you.
Okay, that's good news. Thank you, Rick Santelli.